Welcome back to the channel, guys. Let's take a look at a few charts that I'll be watching to forecast the end of the cycle. And in this case, I'm talking about Bitcoin, I'm talking about the stock markets, and I'm talking about real estate. What else do I do here on the channel? Well, I don't know what else there is to cover in the financial markets. It's your home of macro cycle analysis. As I said, I cover Bitcoin, cryptos, the stock markets, and the real estate cycle. My name is Jason Pizzino, been trading over 16 years. Hopefully you can join us here, hit the subscribe, like the content if you do find value from it. Otherwise, let's kick it off with today's agenda, diving straight into it. As I said for the title, I'm going to go through a few charts that I'll be watching to forecast the end of this cycle. But first, we want to have a look at a couple of charts to suggest that the cycle is continuing on. Obviously, people think that it's ending, some think it's still going, and typically at this stage of the market, you would expect that there are going to be more people, or at least what we've seen in the charts, there are going to be more people that think it's over until it breaks out again. Or at least that's my view, my theory, and essentially I'm showing you what I'm seeing in the charts. So first up, we covered this in the last couple of videos. As I said, I do almost daily videos here, so I'd suggest subscribing so you can stay up to date with the analysis that I'm bringing to you here and on X as well. S&P 500 to break out into new all-time highs. The US dollar downtrend from the 2022 top, which we discussed here on the channel as that top came in. Now, these moves do take longer than most are willing to wait. And I say most, like most investors, most people, they're looking for day-to-day stuff. I see it in the comments. I see it when I talk to people day to day. They're expecting something different every day. They want me to talk about something different. They want me to bring up different headlines and other analysis. And something that I learned a long time ago is that if you want to get good at something, you need to focus on one or two particular areas of interest and study them, learn how to improve on them, and continue to apply them so that you can get better at what it is that you do. So trying to bring in lots of different pieces of analysis, lots of different tools, really just makes the story and your life far more complicated than it needs to be. So that's why I keep coming back to very similar things. They've proved to work for me, and I'll continue to share them for as long as I find that they continue to work. And that's why I continue to talk about the stock market, real estate cycle, which is the basis of everything. And then we add in the commodities and other areas that we can trade, like Bitcoin and cryptos, that are all moving in lockstep in a macro scale here, in a longer term time frame to everything else. And so what I've also seen here is the US dollar downtrend at this stage of the cycle. We're seeing the money supply increase. So something that often comes up at these stages of the cycle as well is more credit creation, and the banks are definitely creating more credit. We've seen it in Australia, we've seen it in the US. The governments are also giving out more money. They're either reducing taxes or they're giving out incentives, like in the US recently, $25,000 to new home owners. So that basically just goes into their pockets, and that pushes the prices of real estate up, and everything continues on. And then coming down to a little bit more of a shorter time frame here, just looking at Q4 into 2025, I think we're forming a higher low on a long-term time frame for that next move up. The rest of it, real estate continues up, stock markets continue up. I think Bitcoin's going to get a new all-time high, either Q4 of 2024 or in 2025. An alt season will probably follow, and I've got that to look at on the chart. And the main thing here is that my fallback is just to follow the swing chart on a longer term time frame, whether it's for a weekly chart, say like cryptos and Bitcoin, or maybe more of like a monthly or a quarterly chart for the stock markets. So with that in mind, let's just bring it back to where we currently sit, because it's kind of hard sometimes to get out of the feelings of what the market is giving to us right now. At least in Bitcoin, we saw a couple of days down over the weekend, so people naturally would freak out and say, well, it's over, it dropped back to 58, it was at 60, etc. But for the stock markets, this one here is a nice chart here of the NASDAQ, and the S&P and the Dow Jones also follow a very similar path, is that these are pretty seasonal periods of September. You probably heard it before, Rectember, and then we get into October, which is Uptober or Pumptober, whatever you want to call it. Essentially, it's the same thing that's happened pretty regularly, but some years you might see it as lower lows from a July into October period. Other years you might see it as slightly higher lows and lower highs. So you get a slightly different pattern, but nonetheless, it's basically a period of indecision. And that's as simple as I want to make it for now. as I said earlier on, we got money supply increasing again. And in terms of the credit cycle, I'm still seeing more money come into the system. As I said, governments are creating it, but when it comes to credit itself, the banks are also creating it, giving you easier ways to get more money to buy that American or Australian or British dream to own your own home. Now, another great thing that I've seen here, S&P 500 weekly forward profit margins at record highs. So this comes to us from Apollo, and Seth's been posting this. Great guy to follow there if you're not on X. If you're not following, definitely do that. The weekly forward profit margins for S&P 500 are at new fresh record highs. So what we heard over the last couple of years was stock markets should be crashing, there's a recession, how are these companies making profits, their earnings reports that they gave us were all down, and well, what we're actually seeing, S&P 500 forward profit margins weekly is at a record high level. So you're not typically going to see any sort of recession or, I guess, economic collapse, depression, when this is still reaching new highs. Look back in the previous cycle, so I'm talking about the 18-year cycle here, 05, 06, 07, they were still making higher highs, but yes, there is going to be something pretty major, pretty significant around the corner that leads to big corrections in forward profit margins. You can see in 2020, there was the dip there, but there was a peak around 2018. So the economy was beginning to slow. The stock market continued to grind higher, and then you had COVID, and then basically it pumped on from there. There's 2022, and what the stock market is doing, just watching, looking forward to see if these profits are starting to come back. And essentially that's what we can see throughout this particular chart. Now, some more just shorter term headways to get through into September and late 2024 is the interest rates. And this continues to flip-flop around between 25 basis points or 50 basis points cut. My main call here, and what I do, is not worry about what the interest rate is doing, not worry about what the market or the media or whatever is telling us, because they just keep telling us different headlines day to day, week to week. At first, an interest rate cut of 25 basis points was going to be enough for the market, but then when the market crashed in August, it wasn't enough. We should do 50 basis points, and then the market climbed back, and they said, oh, maybe even quarter isn't enough still, and it just keeps flip-flopping around in the headlines. So that's what the majority of people look for. They just look for headlines in the media, trying to tell them what's going to happen next and which one you should be looking out for. Is it a quarter? Is it a half? What I've seen over the last 16 plus years is it doesn't matter. At first, I thought it did matter, and then when I started to learn more about it, because it just becomes so much noise, as you realize it doesn't matter at all. And if you want a chart to have a look at that, people often say, well, when the interest rates get cut, the pink line in the background here is the interest rate. When that gets cut, then the stock market is ready to go down, and the economy is slowing too much because they're cutting interest rates, or they're cutting interest rates because they believe the economy is slowing and they want to speed it back up. And so that leads to a little bit of a fear, but often it might only be in the very, very short term. Here is the pause. You got 1, 2 red months. I'm on the monthly chart here for the S&P 500 in the background. Here come those cuts. The market pauses for a little bit longer, another pullback here, and then basically it charges on again. So the 90s were a really good period to have a look at the interest rate and what happens in the stock market, because coming out of the recession there in the 90s, that's basically that recession, the start of the real estate cycle. I think there's my chart there. Right at the start here, there's 1993 at the bottom, and that led into the peak in around 89, 90. There's the correction, market on the way up. What we can see is the interest rates going down, stock market coming up, interest rates pausing, stock market climbing up slowly, interest rates going up. Oh, freaked the market out here in 1994, and then the stock market started to go up. And you can see right there, if I could draw a nice straight line, interest rates come down, stock market goes up, stock market going up, bit of a choppy sideways period here, basically sideways, slight up, sideways, slight down, sideways, up. What's the stock market doing? Just kept going higher and higher and higher. Eventually it rolls over, but that's at a mid-cycle slowdown, and this was at the end of the cycle. So you've got down, sideways, up, sideways, down, up, sideways, down. it doesn't matter. That's my view. I know many people still disagree with that. For whatever reason, I don't think it matters. Just follow the macro cycle, and we are roughly around here. All right, so that is a look at a couple of the specific areas that are coming up in the short term, and then how I look at them in the longer term. As I said, looking at the end of the cycle forecasting. I don't think we're there yet, and interest rates, I don't think, are one big way to decide whether that's the end of the cycle. What I am seeing is another potential breakout to the upside. As I said here, S&P 500 breakout to the upside. Typically when this happens, you get into fresh highs, it keeps going, and that brings on another significant, like another fast move to the upside. Bitcoin usually comes into the play in the first stage of that, and then things get a little bit messy, and that's when you get the correction. So I'm still seeing very strong signs for the stock markets, at least Q4 2025, and typically you've got to run this thing right up into the peak. Now, as I also said, follow the swing chart. So if I'm looking here, this one here might be a little bit better. You can see on a quarterly chart here, so longer term time frame, another really interesting chart to watch if you're trying to forecast the end of the cycle, is a breakdown of the quarterly swing chart, so the TIA GAN swing indicator. A link to this will be in the top of the video description, but it does happen throughout the cycle itself. So this is the current 18-year cycle that we are in. The cycle began roughly around here for the real estate and the economy. The stock market bottomed earlier in 2009, and it might top later in late 2026 or 2027. We'll find out when we get there, because what we're looking at as an indicator for the end of the cycle would be a close, a quarterly close below that swing. I'm just taking a look at this most recent cycle. There has been times where the quarterly chart has broken down from the previous swing bottom. Like you can see here, quarterly breakdown in 2016, Q1 of 2016, but there's the close. If you like candles, have a look at the candles there. You've got a test of those lows and then a quick buyback, big recovery and a higher close. The market continued on. Here is your quarterly swing bottom, so higher lows, which is a good sign. That's an uptrend. Reminder, all through that period, everyone is saying that another recession is coming. If you weren't trading this area, if you weren't investing, if you had no interest in the market, through this whole area, just until we got into 2019, it was basically recession. We had to go into another recession for every single reason under the sun. Anyway, not to go into that too much, the main thing I want to look at here are signals for the end of the cycle. COVID, quarterly breakdown. You had a quarterly breakdown in 2016, but the close was higher than that low, basically showing some pretty significant buying happening. So it's not, I don't look for 100% guarantees in the market, but I look for probabilities. And this has been a pretty good one for the long term here. So the last time we had a pullback was 2022, and then that next quarterly pullback into 2023, it was bought up again. And this one here was the closest one to the election. So the election's coming up next quarter, 6 weeks away, something like that. And in these cases here, you had the election, quarterly breakdown. There was the election, quarterly breakdown, but no monthly, no close under that. Election, that was a test, no breakdown. But remember, we did just come out of a massive, massive crash. And you know what happens when you get big crashes. Usually you get a bounce back. And if it's going to be even more severe, well, the correction continues to go. But in this case, high or low, telling you something that it's probably unlikely that you're going to see GFC 2.0, right? You got this higher low form, no breakdown of the quarterly bottom, and no close under that. Of course, if you don't get the breakdown, then a few quarters later, the election happens. So usually around that period, a few quarters before the election, you get that test of the quarterly bottom. Here is the quarterly swing bottom in 2007. That was the S&P 500 top. You got the breakdown and then the close, and then we led to the GFC. The election was in there as well. And basically that was the end of the cycle there. So that's where we currently sit. The chart's showing that there are no quarterly breakdowns. The last quarterly swing bottom was way back down at 4,000 points. So things are looking pretty rosy there. Another significant chart is the Home Builders ETF. prices are up. This one is a bit of a leading indicator to the economy, to the real estate and the economy. Last time it peaked in mid quarter 2 of 2006. Then the stock market peaked 18 months later. That's why I always say the stock market could go a little longer, because we've got one data point here, which I know I'd love to see more of. And what has occurred, at least here, is real estate topped, home builders ETF, and you've also got home real estate prices that we've looked at on the channel. They topped around 2006. This is for the US, of course, and then the stock market topped later, 12, 18 months later, quite a significant time after that peaked, and everything started to slow and it came down. So from there, you can see the pink line peaked and dump. Now we find ourselves at new all-time highs for the home builders ETF. So the stock market is still, this is not my opinion, a bit more of an objective view here. The market is forward-looking, and it is thinking that there are going to be more profits to be had for the home builders. Home builders are buying land, they're building property and then selling them for a profit, and the majority of the profit comes from the value of the land increasing, not the crap that they build on top of it, not the physical structure, which depreciates. You know, it gets older, it breaks down, and you have to repair it. Okay, so this is a fraction of a point away from a new all-time high. Why? Okay, 1.4%. I take that back. 1.4% from a new all-time high. And some other detail in here, which is looking relatively strong as well. The quarterly hasn't broken down here, and it put in a higher low compared to the S&P 500. So as I said, going back to the chart here, I'm still seeing high prices based on the charts, based on what the smart money is doing, the insiders are doing, because all their trades are produced on that chart, and we're basically just charting either smart money, what they're doing, where the big money is at, human emotions, fear and greed, of course, and things are still looking like they're going up, and there's no signs for the end of the cycle. And if there was going to be the end of the cycle, you would start to see this thing break down on a longer term and then put in some lower highs, at least in this last cycle here, lower highs before the S&P topped, and then you continue down. So you've got a little bit of a warning sign here. It's potentially a canary in the coal mine, right? US dollar, we've covered many times on the channel, so it's probably a good reminder to hit the subscribe button if you haven't already, like the content, and yeah, let me know in the comments section what you find most valuable out of these, because I know I cover a lot of things covering the traditional markets, the economy, and then of course Bitcoin and cryptos. So yeah, hopefully I can cover it all for you. We're looking at US dollar, second half of the real estate cycle. It goes down. Second half is this, 7 years, up she goes. The US dollar typically goes down. So just looking at those dates again, that's 7 years up, getting into these peaks here, and that is the mid-cycle, and that's typically where you would see the US dollar start to come down. There's your mid-cycle, US dollar coming down, and there is a basing out pattern. So that's another sign for me that we're coming to the end of a cycle, that you start to see the US dollar break down. It looks like it's potentially on the cards here at around that 100 level. You can see previous tops coming back to test those levels. If you continue to get this breakdown in the US dollar, bam, we're in the winner's curse. Well, we are in the winner's curse phase. That's the end of the cycle. And then once you get to these lows and the trading ranges consolidate, there's the previous cycle. The cycle before that is here. That's saying that it's time to turn the other way. Probably the US dollar will get stronger again and go up. But mind you, this is on a quarterly chart. And so I know people are very, very short-term focused, which is what the media has made us. Very short-term outlooks, you know, they're used to TikTok and, I don't know, shorts and all this, trying to get their information in 30 seconds, 60 seconds. It doesn't work like that. It's not difficult stuff. It just takes time and time and time and time again to continue to see it and do the analysis yourself. So anyway, 1987, you get another low here around 1990, which is where that recession happened. And if you want to measure this every single quarter until it breaks out again, so just looking at a trading range, the breakout there was about 49 quarters later. That's several years. It's like 13 years. But then you can look at the smaller pattern down the bottom here, 1990 until 1996, so about 6 years low, and then it started to break higher with an uptrend in the swing. Coming to this area here, 2008, 2011, higher swing lows here started to form in 2012, 2013. So again, call it a 2007, like a 5-ish year consolidating pattern. That's 5 years. So it could be a few years of the downtrend, several years in a consolidation before the US dollar wants to go up again. Okay, that's just looking at the last few cycles over the last several decades, nearly 40 years there. Okay, I'll leave that one for now because the time's getting on here. That's another big one that I look at for the end of the cycle. Crash, consolidation, you're probably there. Okay, so that leads us over to some Bitcoin now. I know everyone just wants to see Bitcoin, but that is the majority of the market, not Bitcoin, everything else, right? So let me just start with this. Prices change, fundamentals change. We hear it all the time, different media headlines, all that crap, but human emotions never change. So the way everyone reacts to the markets never changes. We haven't invented any new emotions. I don't think robots are going to do that. I don't think AI is going to do that. I don't think computers are doing that. It's up to humans because humans program all that stuff anyway. If you found an emotion that has been created over the last 5, 10, 20 years, let us know in the comment section, but I highly doubt that we've got any new emotions there. I make that point and I sit on that for a while to explain that, yes, the prices will change. The fundamentals always change, which is why people find it difficult to recall history and put it into a pattern that forms so that you can potentially see what happens next. And so, yeah, if we're just charting that and it's the same emotions, hopefully over time we can get a little better at forecasting where those emotions might go. And in terms of time frames themselves, you'll see time frames for emotions, and emotions can only last so long in either direction. And I've got an example for that in our fear and greed chart as well, which is another one that I look for to forecast that end of the cycle. So we got to this peak in March. You guys probably know by now, unless you're new to the channel, that was pretty much an area I was looking between that sort of February, March period, especially when it got into extreme greed. And then we got our 3-day down signal that said, well, it's probably likely the market is going to need to go sideways or correct from this point. And from that March peak, well, we know now that Bitcoin has corrected roughly 33% over the last 5 to 6 months. I think this is coming to an end now. And I know everyone wants it to happen yesterday, and you've been talking about it for 2 months. I'm looking longer term. Just like I was looking at these lows, I wasn't sure if June was going to be the bottom, but the pricing was very close to the low. And you don't care now when you look back a year, 2 years from it, if you bought at 17, 18K, or if you bought at 20K or 15K. It was all fantastic buying at that area. And that's what I'm thinking is happening here. Whether you're buying anything under 60K, I think that's going to be fantastic buying. You'll look back on it and say like 6 to 12 months and think, why didn't I buy more? Yes, you're going to get hard. It's going to be hard, get shaken out a percent here and there because you'll see it correct to 55 or to 52, and then it sort of bounces back to 60. That's beside the point. You want to know what charts am I looking at? Time frames, big one, nice and quick here. 35 months low to the peak, so the exact cycle low to the exact cycle peak in terms of price. And looking at 35 months, that takes us out to October 2025, so quarter 4 2025. Cycle in 2010 through to 2013 was about 37 months. And if you go back 13 months, well, you're also in another period of consolidation. So it was about 4 to 5 months in this consolidating period. From the 2017 peak, go back 13 months, it was on the way out of another long consolidation. You can see right through here. It doesn't look like much in a logarithmic chart, but if you go back and test it for yourself, it's quite a substantial period there, especially on the corrections. That was about 38% just in there. I know it seems crazy, but yeah, just looking at the same thing, rhyming. I don't want to say repeating, but it looks very similar in the rhyme there. And the last one here from the price cycle, 13 months top, brings you out into the breakout month of October 2020. You go back 14 months, 15 months, 16 months, 17 months, 18 months from the top, you get this upwards sloping consolidation before the big breakout. So I think we're in that kind of stage now. People would say it's wrong. I'd say it's invalidated. Maybe this is your business. You've got to be kind to yourself in how you program your own mind. The invalidation would come beneath our bull market support level. And that's at roughly 44,600, which is the 50% here, okay? So that's another significant time frame that I'm watching here for the Bitcoin end of cycle. What happens in quarter 4 of 2025? I have talked about quarter 4 2024 and quarter 1 2025 because that's going to be roughly 6 months from this low here. You've got August, 6 months takes us to February 2025. We've done 6 months up, 5 to 6 months down, including this consolidation. What happens 6 months from now? The chart, or Bitcoin, loves to do these sort of 6-month patterns. Look at the September low. Where does 6 months take you? It takes you into that peak of March, and then basically the price didn't go anywhere. 6 months there, 6 months here, 6 months there, 5, 6, 7 months. It does this thing over and over and over again. And the Wall Street cheat sheet, when you start to see this, so just coming into emotions that line up with this chart, euphoria, thrill, belief, February, March, even into April, where you got this little bit of a complacency here. I'm not immune to this either. It happens, but when you're watching it in real time, especially with the noise that you can see online, Twitter, YouTube, and then it gets amplified, I guess, to me, which is a problem that I need to cope with. It gets amplified over and over again. People are just saying it's going higher. It's going to 100 now. It's going to 250 now, and it just seems unlikely when you see a lot of the signals pop up at the time. Which the only guarantee I can say is that I think that exact same thing will happen at the next top. It'll be like, you were wrong. Michael Saylor said $1 million. It's going to go to $1 million, and I just don't think that's going to happen. But we'll see that happen at the top. That'll be all the headlines, right? So that's a big one that I would keep in my watch list. Now, I posted this back in June of 2023. Bitcoin was here in June 2023, and the stock market was beneath its old all-time highs. And what I was posting was S&P 500, another highest daily close. Nasdaq's going up. The VIX looks like it was going into its bull market zone again, and Bitcoin was maintaining above macro support. So there was also recessions in Germany. Germany's gone to new all-time highs multiple times after that. UK's done the same thing, and that's over 15 months ago now. So I still haven't seen any signs of this slowing down, which seems crazy because it's been up in this whole phase of recessions, etc. So that brings me to the fear and greed index. We just had another update here. So the short term, 39. I think that's a great sign for the longer term when you can see these very small fluctuations here in price. We had 1% yesterday and basically went from neutral at 51 down to 39, back into the fearful zone. So from what I've seen over history is bases form around this area. The price freaks you out, and it happens. As I said, I'm not immune to this. You can see this freakish price from 61 down to 49K. To me, that's a base forming. Others will say, no, I need to get, they want to be way closer to the market. They want to be only buying at like $49,000 to $51,000. I think that's setting yourself up for failure. I go for bigger ranges, and I'll do the same thing at the tops because I do not claim to be able to sell that exact $74,000 top. My average sell price through here for BTC was 69.5. I got close enough, and I kept it pretty safe for myself so that if there was a correction after I saw this signal, then I'm not going to be freaked out holding all the way down. And I'm looking to do the same thing on the way up. So these lows were roughly the same thing here. You got this extreme fear, the lows forming, other signs were in there as well, but we're just focused on the fear and greed here. The base formed, market moved up. You had another base forming here in just fear, and then the market moved up again. Now here's a big one for anyone that has made it this far in the video. Check out extreme greed times and how long they last. How long can investors, traders, humans last in the extreme greed? Think of it like we talked about Warren Buffett's sex advice, right? Think of this as 93% of you are males, and the women can just laugh at it anyway. How long can you actually last? You can't last forever, right? And there's going to be an average amount of time that you can last. And looking at the greed here, trying to make it a very black and white situation, which is not great for sex, but in this case, a black and white situation, extreme greed at 76. You can see here on this legend, or can you? There it is, 76 to 100. When that ticks over, how many days does it take until it drops back into fear at 46 as a reset. So then you need a reset. You blow your load and you need a reset. All right. You tell me down below, how many times is that? I've done it on the previous cycle. Maybe you can go through and do it on this cycle. You're just looking at 38, 89, 33, 53, 38, 43. You might have one or two times that you can last a lot longer, a few times where you go a little bit shorter, and the rest of the time it's mainly around the average. And the greed here is around that sort of 40, 50-ish days. 65, so it was 2 months for one of them, 3 months for another here, and the rest of the time sort of in that 30, 40, 50-ish days of extreme greed. Is that going to happen again? I suspect it'd be something similar. I don't think people have been able to last any longer in this market. And then I'll just look out to both ends. Once you click over into this extreme greed, how long will it last? And if you see it coming to the end, think back to anything else humans do. They can never go forever, and the extreme greed can't go forever. So if you start measuring, when did we tick over into extreme greed? How long can that last realistically? If you feel very, very bullish, maybe give it a little bit longer. But in the past, it's pretty much lasted, maximum here was 89 days. So it lasted roughly 3 months. Now that doesn't mean that the price will stop and not go up from there. But you can see there's 3 months before it had to reset, and then it went for another month and it had to reset. And then you had the final one here, nearly 2 months, and basically reset lower top, which is bad. And then I also pointed this out. There was another 3-day down signal. That was in April 2021. So I did that on the channel live as well. In advance, not in hindsight. Lower top came in, very weak sign, and then the correction. So another good area to buy in. That is a really interesting one, and I am taking that moving forward to forecast some of those periods. Once we do hit that extreme greed again, it might happen that we get into extreme greed once, twice, 3, 4 times until you get that correction. And in that whole cycle, there was 1, 2, 3, 4, 5, 6, 7 times that Bitcoin was in extreme greed. Now, I've got a couple more to get through. I know the video is quite long. I'll go through these in greater detail in future videos, so make sure you hit the subscribe button and like the content as well. This one here is the USDT dominance. USDT dominance is basically on an uptrend here. So more people are throwing money into USDT. However, when Bitcoin goes on these significant runs, well, it comes back and tests this white line here. So this can continue up while Bitcoin also continues up. Look at the orange line. It can continue up, but it can come back and test these areas, which would be very significant corrections for Bitcoin and altcoins. So if the dominance is going up, generally, well, not always, but basically the dominance keeps going up. What I was going to say is you have periods where you've got Bitcoin going up, but the dominance corrects along the way and also goes up, and Bitcoin's correcting through those periods. The thing to note here is the longer term timeframes. I focus on the longer term timeframes, and a lot of those movements were roughly around 4 to 7 months. 4 to 7 months up, 4 to 7-ish months down. Yes, there's going to be some that are 2 and 3, but we're just looking here at rough numbers. There's a $5, and from this peak down to the low, that was the Bitcoin all-time high. Another $5, so 5 months Bitcoin could last. Think of this again if you want in sex terms or whatever other terms you want, maybe sport, but it can't go on forever. So yeah, roughly 5 months dominance, and then to that peak of Bitcoin in April, 7. So where are we at now? From the low to the peak, you're at 5 months, and this is the 6 months that it's tried to climb. So maybe it puts in a fresh high here. We don't know yet. September's not over. There's still another 15 days to go. Nonetheless, 5 months. It's within that time frame of about 4 to 7 months that it goes in these specific waves of more dominance to USDT, which means a lot of the money's coming out of Bitcoin and altcoins through that period, and then eventually it rolls over and comes back the other way, which means more of that money comes back into the system. And it happens in the bear markets as well. Here's the orange. There's the top to the low. So you can see here to that top, there was 2 months, and then some of the money came back in-ish, and then you ran to this next peak, which was 7 months, and then you had the money basically trying to figure out what it wants to do. Bitcoin went flat here. Some altcoins kept going down. That was June of 2022. And then basically you ran into that final low, into that top, and then you ran back the other way. So more money started to flow back into Bitcoin. That was for 3 months, to this next higher low, 5 months, and to the next higher low, roughly around here, 8 months. Okay. That final higher low happened in September, and then so on and so forth. You had the US dominance dump, and Bitcoin price pump through that entire period. So I'll leave it there. I've got Bitcoin dominance also to have a look at in a future video, but I think this one here looks a lot more interesting for the reason of today's video title, which is basically end of cycle forecasting. That looks pretty good for an end of cycle forecasting. You can see it's hit it multiple times. Doesn't necessarily mean every time it hits that white line it's the end of the cycle, but it's been very significant tops for Bitcoin at its time. All right, like, subscribe. I'll see you guys at the next video. If you want to get the free crypto and economic report, there'll be a link in the top of the video description. That's coming out tomorrow. Other than that, have a fantastic day, and I'll see you in Singapore tomorrow. Catch you then.